Hi, and welcome back. I've got a little bit of a different video today. I'll go ahead and talk about that. I've titled this video The Big Short 2.0 because I've got something interesting to talk about. I saw a video where Dr. Michael Burry, the man who has now become famous with his credit default swap kind of thought process in the last recession, what he thinks, and the video that I saw is about what he's currently invested in and what he thinks is going to do well in the future. So that's going to be a big selling piece for today. I haven't invested any money this week, so as you can see, I'm just under about $3,100 after a bad day in the market. First of all, I'm going to go ahead and talk about something I always forget. Robinhood has a special little program where if you use my code that I always put in the description and sign up with Robinhood and use that code, you will get a free stock, and I will get a free stock. It's a good deal for everybody, and it's definitely worth looking into. So go ahead and look at that if you'd like. But the first thing that I want to talk about is today's performance in the market. So down just under $24, not huge. After that, we'll look at the week. As you can see, I'm up on the week, not much at all, not a whole lot going on there. So we'll go ahead and talk about VTI. I talk about this quite a bit. This is a total stock market ETF, so it's going to follow the markets, and I think it's a pretty good thing to look at in these videos. So as you can see, over the last month, it has performed very well, as my portfolio has. Over the last week, we saw a huge spike, and then we saw a drop-off. And this is pretty indicative of my portfolio. The big thing with my portfolio today that we'll go ahead and talk about is Bitcoin. So that's down just under 2% today. My portfolio does tend to move in sort of the same patterns as Bitcoin because I have such a heavy reliance of it in my portfolio. As we can see, about a 13% share of my portfolio is in Bitcoin right now. Now, when I do go ahead and start investing again, which I've talked about, will be at the top of the year in January. I'm going to start buying a little bit more Bitcoin, actually. Everything that I've read says that now is probably the best time to buy Bitcoin because we're between the huge growth cycles. With that having occurring in May, the estimates that I've seen are anywhere from the 12th of May to the 15th of May. It's definitely something that I'll talk about in the future. And like I mentioned last week, I am planning on doing a little bit different content, some more stuff. So go ahead and let me know what you would like to see. And I should have some of that new content out by the end of the week. We'll go ahead and look at over the month of Bitcoin. So we've seen this large fall off with Bitcoin the past 4 or 5 months. But if we look at the past week, we can see that it has been pretty stagnant, even a small growth pattern. So barring the last 2 days, it has done fairly well. As we can see, my average cost is still above 10,000. The next time I buy Bitcoin, it should dip below 10,000. But with all the estimates I have, by the end of next year, if Bitcoin continues with that 4-year growth cycle, we can see anywhere from 50,000 to 100,000 to 150. I've seen estimates as high as 200,000. In any case, now is a good time to buy Bitcoin because it's down, and we know, I shouldn't say we know, but we're believing that we're going to see growth patterns in the future. But if we go ahead and look at the all-time graph of my portfolio, as I've said before, I always like to show this. I think being transparent is important, and it's definitely something that I'm interested in. We can see kind of the patterns that are going on. So I'll go ahead and overlay some arrows onto this afterwards so that you can see what I'm talking about. But I see really 3 patterns in my Bitcoin portfolio. So in the beginning, flat, not much going on. And then here from May to June and July, we had a really big upstretch. And then from July down to September and October, we had a rather a large downstretch, and now I think we're starting to see a little bit of this growth again. Again, a lot of that has to do with Bitcoin. It's very closely related to Bitcoin, and it's something that I'm looking out for in the future. But that's about all I'm going to talk about in my portfolio today. I've got a couple other things to talk about. So Vivint Solar, of course, one of my largest holdings, a company that I've been buying pretty much regularly over the last year. Huge buy rating on Robinhood. Over the last week, they've struggled. This has to do with a couple of reasons. I'm going to go ahead and talk about that afterwards. But the reason that I want to talk about this right now is that Vivint Solar is down to about $685. As you can see, my average cost is $690. This has fluctuated, and even on the week, we can see as high as $750, which is awesome to see. But part of this, and I have the article pulled up, is that their CFO and some high-ranking officials in their company did go ahead and sell this last week, upwards of 10,000 shares each at $750, and people are a little bit discouraged, saying that's not good. Why are they choosing to do that? Clearly, they have to file that with the SEC, but I'm not super concerned about that for a couple of reasons. So I've shown this in the past. Over the last 3 months, it looks fairly stagnant, but when we zoom out into the last year, we can really see what this is about. So of course, as of last year, the end of last year, pretty much everything in the stock market tanked, really is the best way to say it. And then coming into this year, they performed very, very well. I was fortunate enough to start buying Vivint Solar when it was much cheaper down here in the $4 to $5 range. But that's when my portfolio was much smaller, wasn't buying nearly as many shares. And that's why when I started buying up here, dollar cost averaging did help, but that's why my average price is up at $6.90. But the reason that I would like to point this out is because we see this large growth trend. And then really from their earnings call on August 7th down to their last earnings call, not looking great. It was in a downward trend. But when we start looking from October to now in mid-December, we're starting to see a little bit of stagnation in there, even some upside. And there's a couple of reasons this is important. So the first one that I want to talk about is the forecast for Vivint Solar in the future. So I've got the CNN article pulled up. They have Vivint Solar at 685, which is what I have. So on the year, we can see up 80%. We just went through all that. But the reason that I find this so interesting is because of their forecast and what they have their target price at. So target prices, as you can see, anywhere from $9 to $14 on this stock. So everybody's pretty high on it and thinks that they can succeed in the future. I've gone over their financials before and how they're still losing money but are on the track to making money. And this next article that I have pulled up actually talks about Vivint Solar potentially making money within the next year, which would be gigantic, and that's why I think it's a great time to buy for them right now. So as we can see, their analyst recommendations are saying buy. Everybody's saying buy, very similar to what Robinhood says. Nobody's saying hold or sell. And then we go down here, we can see kind of some of the more nitty-gritty details. So as I said before, they're losing money in the last quarter, losing 34 cents a share. 78 million in sales, but I'm not super concerned about that. This article, I think, goes into greater detail about why this is important, and that's because as of today, there are estimates that Vivint Solar is going to make money. They're going to post earnings for this quarter. Now, certainly, we don't know if that's true. We're going to have to wait to see. But they're saying that the earnings per share estimates is anywhere from negative 22 cents up to 7 cents. I guess their prediction is negative at losing 8 cents per share, but certainly better than what we've seen in the past, and I think that's very important. But here you go. They say that Vivint Solar will report full-year earnings of 64 cents loss, with earnings per share estimates from 78 cents loss to 50 cents loss. We've known this. We know that they're in a sequence right now where they're trying to decrease their debt, try to pay off that debt, but I'm not concerned at all. And everything that I've read says that this should be a good potential company for the future. But when we go ahead and talk about here, they say that they've had a negative return on equity of 115%, negative net margin of almost 25%. But this is really why the stock has outperformed really in the last quarter. As they said, the firm had revenue of $103.8 million, but analyst expectations were down at $96 million, which is always a good thing to see. But if we go down here, like I said, their CFO sold 10,665 shares of the company's stock. That was a couple weeks ago. But they had another, here we go, their chief financial officers, their CFO owns 340,000 shares. Also, EVP Thomas G. Plagueman sold 12,970 shares of the company stock, on November 26th. So that is a little bit old, but again, people are concerned as to why they would be selling stocks at a time like right now. But again, that's a company that I'm going to continue to purchase in the future. And now we'll get into what I titled this video, basically. So Dr. Michael Burry, like I said, has become very famous. He made a lot of money in the recession. He saw the gap in what homeowners thought was a stable economy and really the underlying failure in the financial system. But I did see a video where back in September, they said the largest holding in his entire portfolio right now is a company called Tailored Brands. You may not have heard of them, but this is significant for a couple of reasons. So if we go ahead and look, TLRD, Tailored Brands, We can see 528 on the day. If we look to the week, you say, well, that's good. He's clearly got something figured out. Over the last month, not too bad. But when we start looking at the last year, we can see they're down 75%. And over the last 5 years, since they went public, they have struggled mightily. Now, when we go into their basic details, we can see that they are earning money right now. You're saying, well, why is this happening? I mean, it's really a great question because this is a guy with a PhD who's extremely intelligent, and everybody's trying to figure out, what does he know that we don't? What has he figured out? And that's really a question that I keep asking myself, because when we start looking at their target price, we've got a couple different things going on. We see target prices at $15, $15, $17, $17. And you're saying, well, I mean, look at these upsides. That's enormous. Not to mention the fact that this stock is paying a constant 18-cent dividend per quarter right now. If you go ahead and do the simple math on that, it's over 13%. So there's a lot of really goofy things going on. But the big thing for them is that they've got enormous levels of debt that they're trying to grapple with right now, trying to get that paid off. And so I have looked at this. I've done research, and I'm kind of scratching my head as to whether or not I should buy this stock. It is paying an enormous dividend, but that's because they've had such enormous losses in the past, and a lot of people have counted them out. So, of course, it could be a great time to buy, or this company could fold at any given moment. We just don't know. And that's really why I'm so interested in this, is that a guy who's that intelligent, made that much money in 2008 when everyone else expected the stock market to do well and it crashed. Why does he see it as a good investment? And I've tried to look at this and figure out why. I've tried to do research for explanations from him, and I really haven't come up with much. So if you've heard anything or you have any ideas, please let me know in the comments. I think it's really interesting, and I'd love to know. But here's really where it gets interesting, is other people have their target price at $6. But even at that level, it's trading for $5.28 right now. And so that would still be a 10, 12, 15% growth. When you're talking about a constant dividend that is paying that high, there's almost no reason not to. But again, you have to go back into the financials and understand that they have enormous levels of debt that they're trying to pay off, and they have struggled mightily in the past. So definitely something that I'm looking into, and something that I'm considering. I just don't know. And that's really the hard thing here, is I want to say that I have an answer and I don't. And I really just want to know what you guys think, what the experts think, and why somebody who's so intelligent would be putting this much money into it. Again, this is the graph that just drives me nuts, down 75% in the last year. But the other reason that I found that video interesting is Dr. Michael Burry talked about why he thinks that index funds are a problem. And so he actually sees the next hole in the economy, instead of being in the housing market. He thinks it's in the stock market with index funds and ETFs. Basically, his explanation is that he thinks people buying into these broad index funds, which have performed extremely well over the last 10 to 15 years, are really masking a larger issue, that these index funds are kind of floating everything, and that companies are being bought and overbought really all over the world. So it is a very interesting topic. If you'd like, please comment down below and let me know if you'd like to hear more on this. I certainly am willing to make more content about this because I think it's very, very interesting. So go ahead and do me a favor, like the video, subscribe, and like I said, I will be back at the end of this week with some more content. Thank you.